What is happening, YouTube? It's Matt Faircloth. Thank you for watching the YouTube channel today. I've got a great guest who is a mentor of mine, and I'd like to even say a friend of mine who has taught me so much about real estate investing and has helped me elevate my game from here to here. He's helped a ton of people in the real estate investing business. He has the longest running daily podcast on real estate investing. If you don't know about this guy, you're not really immersed in the real estate investing business. You know who this is. This is Joe Fairless, my man. Welcome, Joe. Thank you so much for joining us today on the YouTube channel.
Hey, grateful to be on and looking forward to our conversation.
Yeah, I am too. So an opportunity to have you here would be you just have a book out, and I'd like to talk to you more about it. I'd like to learn more about it, and I'd like to have the folks that are watching the YouTube channel learn more about you, more about the book, and just hear what you're up to these days. So what's the name of the book that you have out?
It's called The Best Ever Apartment Syndication Book.
It's the best ever. And it's actually what I would say is maybe the only ever apartment syndication book, because a lot of people talk about facets of this business. My book, Raising Private Capital, really just talks about building networks to raise money. Now, that could be to go into apartment buildings. It could be to go into fix and flips. It could be to go to joint ventures for deals or whatever. But really, my book just focuses on building networks and creating streams of money. But then what do you do with it? Well, after you've read my book, you should read Joe's book, because Joe's book talks really specifically. It is a from what I understand from you and from reading up on it, it is a how-to on raising money, structuring. Tell us what the how-tos that the book tells us, because I'm really excited.
Yeah, you're right. It is a how-to. It is based on, or it is broken out into 4 parts. One is experience. You got to have experience and the knowledge in order to raise money. 2 is how do you attract the private money and keep the private money flowing towards your deals. 3 is actually finding deals, getting deals being sent to you, as well as underwriting them. And then 4 is, and this 4th part, a lot of the times is glazed over, but this is where you can lose a lot of your money if you're not flawless or near flawless, and that is execution. You got to actually deliver on what you project. And so experience, money, deal, and execution. And earlier, before we started recording, you asked me if I had a copy of the book so I could show, and just to show you, the monstrosity that this book is. I mean, this puppy is like 450 pages long. And the reason why you had asked me before, why is it so long, or how is it so long? I say, because it's a how-to book. And I make a point at the very beginning of the book to specifically mention that, because I have one chapter dedicated to what you should do. And it's basically a blog post, right? Like anyone can say what you should do, but the nitty gritty of actually how to raise private capital and buy apartment buildings, that takes a lot of explanation, and it takes a lot of specific examples. And so this book, it outlines exactly how to do an apartment syndication from start to finish.
Mm-hmm. Yeah, I think that's great. I've heard people out there, and I've even seen like there's some guy advertising on Facebook or whatever about like he's done the Facebook sponsored ads about like, buy apartment buildings, no money, no nothing, no experience, whatever. You said experience, and that's something that I talk about as well, is that people need experience to do this business for a lot of different reasons. So do you believe that you have to have a track record, some sort of experience, or some sort of background to get involved in apartment buildings?
I believe you need to have one of 2 things. You don't need to have both, but bonus points if you have both. One is experience in real estate, whether it's single family homes or fixing and flipping, single family homes buy and hold, or fixing and flipping, or storage units, which, storage units, you're probably not wondering if you have experience. So some sort of real estate experience where you've actually made a purchase as an investment, or a professional track record where you have accomplished things that set you apart from your peers. And the reason why I say that is because ultimately apartment syndication is a business. You're an entrepreneur. And if you have a successful track record as a business person, getting promoted, reaching certain goals, elevating elevating relative to your peers within whatever profession you've chosen, then you've shown that you're savvy as it relates to the field that you've chosen to be in. Therefore, it's likely that when you apply yourself to this new field, apartment syndication, you'll have similar success if you apply those same practices. And so the person that this is not for is someone who has no experience in real estate investing and no professional track record to speak of where they've excelled within their chosen field. And now, it's not ready for you yet. But as you acquire that experience and as you acquire that knowledge, then you can get into it. But it is my opinion that you'll want to gain either professional track record or some real estate experience on the smaller scale before you go into larger stuff.
Yeah, I agree with you. There's a lot of nuts and bolts. There's a lot of nuances. I mean, each apartment complex in its way is its own business. I mean, it's a living, breathing thing. I mean, it's got all kinds of different angles to it, and getting the deal to closing is an act in its own. And then managing it, running a business plan, knowing how to manage people. There's so much that goes into this business. I wouldn't wish owning an apartment building on someone who knows nothing about it, or nothing about the business, and have them just kind of learn in the field. I learned through smaller real estate, through single family homes. I believe that's how you got started, was on smaller stuff, and then very quickly worked into the bigger stuff. But those can be good classrooms, smaller pieces of real estate, and you can quickly grow into it. But there's just too much to know, I think, on larger apartment buildings, that without some knowledge, something to bring to the table, you can very easily just really screw it up. Not during maybe the offer and the buy process, but the part that you and I talked about offline, the execution part of the apartment building, which is that's really where the money's made. You'd agree?
Yeah, absolutely. And just to give a specific example, I have my daily podcast, and I was interviewing a guest yesterday, and he owns $15 million worth of real estate, mostly self-storage. He also owns apartment buildings. And I said, what's the largest apartment building that you have? And he said, a 50 unit. I said, what's the largest self-storage unit facility you have? And he said, 450 units. And I said, which one takes up more of your time? And he said, far and away, that 50 unit apartment building, far and away. I said, which one gives more cash flow? Self-storage. So I know I'm not selling apartments right now, like where everyone's watching, like, I want to do self-storage. Well, the flip side to that is, when you execute the business plan properly with apartments, even though it is more time intensive and there are more ways you can mess up, the exit, and this gentleman I interviewed definitely proactively said this, and so he definitely agrees, the exit on apartment buildings when you implement the value add strategy, which is outlined in this book, is 10 times or could be 10 times more lucrative than the self-storage. So self-storage, they're cash cows. But apartments, you can make money along the way, but holy cow, when you do the refinance supplemental loan, or when you sell, that's where you get a huge payday.
Yeah. You and I are kind of preaching to the choir because we're both apartment guys, but I mean, I've found that apartments are the least cyclical of all investments. That, if you and I decided we wanted to get into medical office buildings or retail strip centers or industrial sites or office buildings or whatever it is, those could be lucrative now. But the economy can shift, and we live in a very dynamic economy. Amazon's really changing the way a lot of Americans consume things. That's changing retail. A lot, like things like WeWork and Regus and whatnot, are changing the way people work and have office space. So that's all dynamic. But at the end of the day, people still have to live somewhere. And there's even like these like minimalist, minimalist structures, and like kind of sell all your stuff and give all your stuff away, that I think a lot of people are getting maybe people might start getting out of self-storage because they just decide they don't need that crap and they want to get rid of it or whatever it is. But they still have to have a roof over their head. And so I find that even given economic shifts, which will do things like change our interest rates, it'll change our rents, it'll change our expenses, it'll change all that stuff. The fact of the matter is that if we create a great product in an apartment building for people that's in an area that there is growth that people want to live in, it's not going to be that hard. It's not going to be impossible. I mean, if you're at 60% occupancy or something like that, something's wrong. But you could very easily have a 60% occupied office building in a great location.
With apartments, they are, and I agree with you, they are insulated more so than other commercial real estate asset classes. But there are ways to lose your shirt and everything else when a correction takes place. And in my book, I write about the 3 immutable laws of real estate investing that, when followed, you will insulate yourself as much as possible. No one's completely insulated from a market correction, but there are 3 fundamental laws of real estate investing, and in particular investing in apartments, that when followed, regardless of what type of correction takes place, you will be set up not only to survive but also thrive due to positioning your apartment community properly and safely.
Give me I don't want you to do all 3 of them because I want people to check out the book. But give us a teaser. Give us one of those 3 immutable laws so we can get a little taste of what we're talking about here. I think that's exciting.
The second one is fixed interest rate long-term debt, because what happened in 2008, one of the reasons why individuals lost their properties is because they were just they were unlucky. Their loan became due at a very inopportune time. And part of it is unlucky, but part of it is not having the foresight to see, okay, there are 3 years left on my loan and times are going really well. I really need to make some decisions here because I don't want to be pushed in a corner whenever a loan becomes due and the market takes a turn. And so for all of our projects, say we have a 5-year business plan, well, we're going to have a 7-year loan on that property for the most part, unless you're doing a bridge loan, and that's a whole nother conversation. But there are ways to mitigate risk with bridge loans as well. But let's just go with one example, long-term debt. When you have a locked-in interest rate over a long period of time, a market correction takes place. Well, that's okay because you're not forced to sell. You're not forced to refinance. You're not forced to find an option to pay off the loan in cash, because those are your 3 options, right? You got to sell, you got to refinance, or you got to pay it off in cash. And the problem with any real estate investor who loses money, loses a property during a crash, is their hand was forced. And when we proactively think about the scenarios that we can mitigate risk in order to not have our hand forced, then we'll be able to do well.
Yeah. I think that's great. I mean, just the interest rates are one of the few things in apartment buildings that are truly outside of the control of the investor. So it's about setting things up and setting yourself up to mitigate risk in the future. But that I always tell people that apartment building investing is the one thing that really has nothing to do with Wall Street. But the one thing that does is interest rates, and I think that is like if the economy shifts, stock market crashes, whatever, it could indirectly affect our industry. Although it's not going to directly pull down the value of my apartment building if the stock market goes down, as it would if I were invested directly in the stock market. But it is the one indirect tie to Wall Street that I see, aside from somebody losing their job or whatever because they work for a company that went under because of Wall Street. But that's so far indirect. It's so far separated. It's not even worth talking about. But interest rates are the one thing that I think that we really got to keep an eye on in our industry. Yeah, I really like that. What do you think about assumable mortgages? About buying something where it's assumable, you can get a lower rate now, and maybe sell it. That assumable rate becomes a value in the future. Correct?
Oh, absolutely. Yeah, all of our loans are assumable. Usually there's a 1% fee in order to assume the loan. And that's certainly an additional exit option, because we're buying a property for $49 million right now. We just got a fixed interest rate at 4.53%. And we have it's going to be a 12-year loan.
Yep.
Well, 6 to 7 years of interest only. And we plan on exiting out in 7 years. But if the market takes a turn, then in 3 to 4 years, we might have a buyer who wants this 4.53% interest rate on a cash flowing property at a very good valuation.
Sure.
And if we don't, then great. We'll just keep on holding on to the property, and it just gives us more options.
Yeah. And I think that in being around long enough in this business, we know that 4.35 is a great interest rate right now, but it might not be there forever. And I've been around when 4.35 was not something you could get. I've seen lower than that, and I've seen much higher than that in my career in this business. So realizing that things are not stagnant, they're dynamic, and if you can lock in something now, it becomes value later for someone else, and they can put in a supplemental mortgage above that. They don't have to lay all that equity down. They can give you more money than what you paid for the place. So for the listeners out there, understand that Joe can keep that mortgage there, or the buyer can, and they can put in, it's called a supplemental, but what you may think of it would be like a second mortgage or something like that, to sit on top of that. And maybe that's at today's rates, but they still get to enjoy his first mortgage at 4.35%. Which is really great. I mean, it's you may be able to command a premium for that in the future, because they may be borrowing at 7-8% in the future. It's hard to imagine now, but that's possible.
Yeah, absolutely.
Yeah. So how do they? So folks, I want to. This is just a little taste. As Joe said, this is a 450-page book. This is literally everything that you need to know about setting yourself up for experience, raising money, finding deals, and then executing your plan for apartment buildings. This is the how-to. This is the book that y'all want to check out if you want to expand your business in apartment buildings. And it's from one of the masters, one of the folks that's been around for a long time, and is a great thought leader in the real estate apartment building space. So, Joe, how do they find out more about you, and how do they check out the book?
Well, talk about great thought leaders. I also want to give a plug for this book, one of my favorite new books, Raise Private Capital. Phenomenal job, by the way, on that book.
Yeah, thank you.
So you can get the best ever apartment syndication book by going to Amazon. But when you purchase it, email a receipt to info@joefairless.com, and we'll get you some free goodies as well.
Cool.
So info@joefairless.com. Mention that you heard this offer on Matt's show, and we'll make sure we hook you up.
Nice, cool. So, and they can, where's your company website? They can learn more about what you guys have to offer, hear more about your podcast, learn more about Joe Fairless in general. Where do they go for that?
joefairless.com.
joefairless.com. Head there and head to Amazon, pick up a copy of Joe's book. This is a great book for anyone that's looking to really raise their game in the apartment building space from someone who sure does know what he's talking about. So, Joe, thank you so much for taking some time to spend with me and with our audience talking about the book and talking some shop about apartment buildings. I really appreciate having you here.
Enjoyed our conversation.
Cool. See you, Joe. Thanks for watching, guys. Have a great and profitable week.